We start with our news series, Oil Sands at a Crossroads. This week we're focusing on the politically and economically contentious issue of Canada's oil sands and the pipeline that has brought it international attention. Western Canada's so-called oil sands region in the province of Alberta is the world's third largest proven source of oil. The International Energy Agency lists Canada's reserves as being around 178 billion barrels. The challenge is to get that oil to areas where it can be refined and shipped. That's where the Keystone XL pipeline comes in. The Keystone pipeline is not actually a single pipeline, but rather a series of pipelines. It currently runs from Alberta to a massive oil distribution system in Oklahoma and other parts of the U.S. Midwest. The plan is to extend the pipeline to the U.S. refineries in the Gulf of Mexico. President Obama has already given the go-ahead to this plan, and it's expected to be up and running by 2014. The final portion of the pipeline, called Keystone KXL North, would provide a more direct route, but that would also require slicing through pristine areas of what's considered America's heartland. Throughout the week, we'll be exploring the political, economic, and environmental challenges surrounding the Keystone project and Canada's oil sands reserves. And as the global race for fossil fuels heats up, Canada sees expansion to Asia as a vital part of staying competitive. And Chinese companies are heavily invested in the outcome. CCTV's Jessica Stone takes a closer look.
It takes a helicopter view to appreciate the expansiveness of Canada's oil sands. The mines emerge from the dense boreal forest in Alberta province, stretching for more than 140 square kilometers.
Much of the oil sands development you see here in Alberta is thanks to Asian investment. Fully one-third of foreign direct investment in the oil sands comes from China. But China isn't able to buy Canadian oil. There simply isn't a cost-effective way to get it there.
One of the oldest mines here, Syncrude, has more than 16% investment from Chinese oil giants CNOOC and Sinopec. Ryan Kubik is the chief financial officer for Canadian Oil Sands, which has the majority stake in the mine.
Chinese investment and foreign investment in general is very important to the development of the oil sands. We can't fund all that capital just in Canada alone.
Syncrude runs two separate mining operations around the clock. Immense trucks haul hundreds of tons of oil sand, which must be crushed, mixed with warm water, and sent to a plant where a tarry substance known as bitumen is extracted.
Between those two mines, we can upgrade the bitumen to about 290,000 barrels of crude oil a day.
Just to give you an idea how large the trucks are here at the Syncrude mine that are taking the oil sands away, this is one of the tires for the largest vehicle here. It can carry 400 tons a load. That's 200 barrels of oil.
The majority of the oil sands, though, are too deep underground to be mined by shovel, and instead must be extracted from the sands with steam under intense pressure.
With these 9 well pairs on this pad, we're producing approximately 21,000 barrels of oil.
Oil sands company Cenovus has two operations which produce more than 600,000 barrels of bitumen a day. Since it's not upgraded, it needs access to heavy oil refineries like those found in the U.S. Gulf Coast or China. The Canadian Association of Petroleum Producers expects oil sands production to double by 2030. But the oil sands are at a crossroads. In order to transport that much bitumen to refineries and ultimately to buyers, the industry needs more pipelines.
As a country, Canada is leaving tens of billions of dollars in revenue on the table every year because we're selling our oil at discounted prices because we don't have enough pipeline capacity over the longer term to get it to market.
How are you going to get your product to Asia?
We've got several pipeline projects that are planned to both the west coast of Canada as well as the east coast of Canada.
While a handful of existing pipelines have been reversed or expanded to create short-term relief, some of these pipeline proposals have been caught up in lengthy regulatory battles as political leaders weigh their potential environmental impact.
This is the first spill site we were shown.
Carol Campbell of the Alberta Wilderness Association toured the site of an ongoing underground bitumen spill in Cold Lake, Alberta, in early August.
They don't understand the geology of the area. They don't understand the risks that are involved with these high-pressure steaming operations, and they should not be doing it.
So that's what you send to the refinery?
Yeah.
Extracting oil from these deposits requires large quantities of water. In 2011, Syncrude used enough water to fill 120 million Olympic-sized swimming pools. Cenovus used more than 1 trillion gallons at just one operation.
So as we move towards the future of oil production, we are moving to those kinds of oils that are more difficult to extract.
By some estimates, the added difficulty generates around 12% more greenhouse gases per barrel of oil than from conventional wells, a claim the industry disputes. Then there's what to do with the more than 170 square kilometers of wastewater ponds from the tar sand extraction. Environmentalists say these ponds contain chemicals so toxic they have poisoned wildlife. Only Syncrude has successfully returned a mine to nature, and it took 30 years from start to finish.
It was a decades-long process to mine it out, and it is a decades-long process to put it back.
Pipeline opponents in the U.S. and Canada often cite these concerns at public hearings like this one for Keystone XL. They believe if they can stop the building of more pipelines, they can curb the oil sands altogether.
Keystone is this linchpin. It's like if Keystone is permitted, we will see more money into the oil sands. We'll see a massive expansion.
Goldman Sachs and Standard & Poor's have both issued reports saying the oil sands production targets can't be met without additional pipelines.
One analyst coined the phrase stranded assets for the oil sands. Do you believe that you could become stranded here in Alberta?
Well, I don't believe that. Like I say, markets are persistent, and markets are ultimately the master.
For now, Cubic says the markets have moved Canadian oil to rail.
The industry has already responded with that rail transportation that 5 years ago you wouldn't have thought would happen.
So as Canada seeks new markets for its abundant energy resources, the oil sands and pipeline politics are at a watershed moment, waiting to see if the oil companies can strike a balance between profit margins and public safety. Jessica Stone, CCTV, Fort McMurray, Alberta.